Welcome to the Swing Trading with Cycles channel. We're going to do an update on commodities today. We'll start with platinum. We'll look at palladium, copper, wheat, corn, and wood/lumber. And so it is October 15th. It's Saturday night. And so this is after the CPI print that was really important. Still kind of unclear exactly how that's going to settle out. But we'll start with copper. And we'll start on the weekly chart actually here. And notice I don't have any of the cycles counts labeled here per se. Not super important. We're really kind of looking at the price action here, and we're going to extrapolate cycles from there to some degree. What you'll notice here, weekly chart, yellow line is your 200-week moving average. Notice we've been below that since basically call it the end of June. We had that move lower. We had a rally right above the 200-week moving average, which failed, right? Like below here, we had a swing high, right? And then we had another swing high below there. And so this is definitely setting up for another test of that 200-week moving average, which is going to be really interesting. Call it around that 930 to 950 area. We'll see. I suspect it'll get rejected. The monthly chart, we're still actually pretty green on the month, which is actually not what you're seeing for other, certainly not precious metals. But this is certainly, platinum is kind of holding up a little bit. And if we look at the yearly chart, again, 1 year, each candle of full year price action, we are just below last year's low at 2021. That low was at 900, right? And this 2020 candle is a big hammer, but the thing to keep in mind is that this lower wick is generally pretty vulnerable. And so the low on that candle is 565. It would not be surprising to see us test that, right? If nothing else, certainly this big down candle in 2008 with the financial crisis, right? That had a low at 752, right? So you have to imagine we're at least going to come down and test that level, if not get down to that 550 area where we sort of bottomed at COVID. So that's platinum. Not looking great. Palladium, but again, still actually green on the month, which is more than you can say for many things. Palladium is a perfect example. Let's start on the monthly chart. Look at that thing. This is your monthly chart. We're about to go bearish outside month on palladium. That's important to understand that, and take a look at the links in the description. Take a look at the Cycles 101. This is a concept I talk about all the time. If you're not following me on Twitter, definitely take a look at the link in the description. You want to do that. I give more timely updates there. But we made a new high above the previous candle. So this is your September candle. Your high was at 22.78. We made a high above that. And now we've come back and we're going back through the range. We're red now. So the expectation would be that we're going to make a low below 1962. We're here at 1989. And you would think we're going to sweep below these lows eventually, right? So below 1800 and probably come back and test this thing here, right? So not looking awesome for palladium. That's palladium. And that's your monthly chart, and your weekly, right? The lower time frames cause the higher time frame patterns, right? And so on the weekly chart, you can see we have a really ugly looking swing high, right? Once we went below the low of this candle, right? This candle marks the high, and once we went below the low of that candle, which was 2166, that gave us our swing high, and we got some pretty big follow through on this candle. Now that could change, and notice that was actually our close below the 200-week moving average. So again, this yellow line here, that's your 200-week moving average. And we did indeed close below it. That big swing high caused us to close well below it. And now we're going to, you can see, we've been kind of dancing with it the last, really months. Even since here, right? We closed below it a few weeks, then we went above it, then we closed below it, then we went above it. So that's not usually a good sign, right? When something is just kind of flirting with something like that, it's probably going to break meaningfully below it at some point. So that's palladium. Let us look at copper. So copper. Now this is one where we were tracking the weekly cycles, and so we'll start with the daily chart. We don't have any cycles on this, but like this is a huge bear flag, is what that looks like, right? Let's look at the weekly chart if that gives us some more clarity. So again, this yellow line is your 200-week moving average. This appears to be week 21. We have a low on week 9, right? And then we did this circle back up, and now we're circling back over. It just seems like we're looking to retest this low. Again, this is week 21. So that would suggest that we're really late in the weekly cycle, which would mean we could get our ICL soon. But more importantly, the way we're hugging this 200-week moving average, that does not look positive. And if you look at the daily, the monthly chart, we haven't gone red yet, but that's an important concept I keep talking about in the videos. Once you go below the opening price for a given candle, that candle goes red. In this case, the opening price for this monthly candle was $3.39. Call it $3.40, right? So once we fall below that, so we're at $3.42. So not very far below that. Not very far above that. Once we fall below that, this candle would become red again, which means literally it's moving lower, which means we're getting closer to retesting that like 315 area, which is a low from this candle. And if you think about the cycle perspective on here, we rallied for 24 months. And you can say this was actually your top. We consolidated here. We had a nominal higher high, just a slight higher high. And that actually ended up being a false breakout, right? Because we now just cascaded lower after that. So this all suggests we continue to consolidate inside this range and then probably break meaningfully below there. And you could see a world where, we don't really see a bottom until like the 250 area, 260 area, right? Where you can see there was a lot of price action in that area. A lot of cases where price kind of bounced, and obviously in this case it sunk right below it. But that gives you a kind of like a really, really broad frame of reference. Let's look at wheat. And this is wheat. This is and we talked, and I'll definitely take a look at the links in the description. And at the end of this video, there'll be an easy link to get the last video that we talked about commodities, just to get a sense of continuity. But we did talk about this. This is your monthly chart. This is not looking good. Why? Because this is actually setting up to be a bearish outside weekly candle, or excuse me, monthly candle. This is your monthly chart. So all things being equal, if we don't get a reversal for the wheat ETF, so this is a Securium wheat ETF, ticker symbol WEAT. It tracks wheat like the futures. All things being equal, we would expect to get a move below $8.12. We're now trading at $8.75. So not great, not great at all, because we made a higher high, and now we've come back and we're now red. And so you expect we probably make a lower low. And equally important, this becomes a higher low off of this, right? So this means we're in a downtrend because we made a move, right? We came down. This becomes this becomes a lower high, sorry. And then we can see a move down there, and then that's another lower high, another lower low, another lower high, another lower low. That's a flavor of how it could kind of work out. So that's your monthly. That gives you a kind of a really good sense. And your weekly, you can see why it happened on the weekly, because the weekly had a weekly bearish outside candle. So we made a higher high, and then we made a higher low. We've already made a lower low. That's important to understand. The lower time frames trigger the higher time frames. So because we had a bearish outside candle on the weekly, we're now potentially going to get one on the monthly. We're going to see if that actually plays out, of course. And my God, this is all just looking really bearish. That's good to know. And finally, let's look at corn, right? So this is actually the CFDs for corn, not an ETF. Want to just take a quick look. This is like your purest version of it, let's call it. So this is a monthly chart. This is actually only going back to like April 2020 for whatever reason. And you have your like higher low here, right? Around 510. we made a move higher, and that's going to be an important level, right? So that was your top from 2021, June 2021. We're now below that top. Remember how corn went down, came up, and now it looks like it's going to make a higher low. Now this is a question of, does this one get to 741 before making a higher low? Or excuse me, a lower high. Apologies, a lower high, bearish, right? Like this is what, like, so we have this, this. Now is it this and then that, right? Right? Because it could be this, that, right? That we're gonna have to watch for. But right now, not looking so hot, and that's corn. So that's your kind of quick overview of commodities. We'll also just kind of quickly look at oil because that's obviously really important. So the monthly is still green, but we're building up a pretty vicious upper wick. That's important to know about. And as I tweeted about, we're on day 14 of the daily cycle, which is setting up to potentially be left translated, which would create a situation where we continue to decline on the weekly chart. So on the weekly chart, it looks like we have a weekly cycle low on week 24, right? And last week would have been week 2, right? So this was week 1, and this is week 2. So you really are expecting we would have to hold a higher low at, like, worst case scenario at 79.55, and to have a chance of kind of resuming higher. Now, as I keep mentioning with multiple assets, that 200-week moving average is looming. In this case, it's continuing to rise, so we can get in a situation where we don't go up too much, and this continues to rise, and they kind of meet each other, and at some point we end up testing it. So we're going to watch for that for sure. So that's your lay of the land for the commodities.